Hey traders, it's John Fortune here of this week's Weekly Forex Forecast. I hope you're having a great weekend. Let's kick off with the DXY as we always do. In last week's video, I noted that the DXY was trending to the downside in this channel, and I highlighted the 90.860 as an area we traded into, and the breakout intraday we were looking at in last week's video. And because of this, I was looking for further declines into the 89.7010. We did come down, take out this target almost to the pip. That was the low last week. So we had a really nice sell-off in the DXY, and this translated nicely into the dollar pairs. Coming into this week, we have tested this key area of support 3 times. However, generally speaking, it's not a good policy to buy support in a downtrend. You buy support in a range. 9 times out of 10, if you buy support in a downtrend, the market ends up consolidating and then breaking down below it. So going into this week, I am still looking for further declines in the DXY, and I'm going to be looking down towards the 89.23. This means that I go into next week once again with a bearish bias, and this is going to remain the case until we get a significant reversal in the DXY. So I favor dollar weak positions once again going into next week. I will keep an eye on the DXY next week, and for those of you who don't already follow me on Twitter, I will be posting updates on the markets as new information comes in on my Twitter feed. So if you'd like some updates on these markets throughout the week, feel free to join me over there as well. Next is Euro-Dollar. Now last week I was looking for a rally in this market, and we took out both targets to the upside, and I did say in last week's video that I was looking for Euro-Dollar to take out the second target to the upside at the same time as the DXY traded into the 89.71, and we did get that, and that was pretty much the high of the week, the second target here in Euro-Dollar. Going into this week, the uptrend is still intact, so I do favor long positions once again. I've left the second target on here because any pullback into the channel would be viewed as an opportunity to look for bullish setups into the next key area of resistance, the upside, the target set at the 1.2345. But if you want to be extra cautious in Euro-Dollar, the more cautious approach to this, instead of trading into this key area of resistance, would be to wait for a break, a pullback, and then look for long opportunities into the 1.2345. Either way, I do still favor long positions in this market as it currently stands. Next is the S&P 500. Now I noted previously that we were sitting at a key area of support at the 4121, and I am looking for further advances in the SPX, but we're currently stuck in a range. So I am still looking for further advances. What I would like to see, if you are looking to trade the SPX, I would wait for it to break out of this range. Any break, a daily close, a nice momentum break above the 4171.91 would be viewed as an opportunity to start to look for bullish positions up towards the next key area of resistance, the upside and the target set at the 4270.92. So whilst the S&P 500 is stuck in that range and waiting for a breakout to the upside, what does look interesting is the Nifty. We've broken out of this major inverse head and shoulders pattern here, and we currently sit above the confirmation point. So very simply put, going into next week, any pullback towards the 14980.15 would be viewed as an opportunity to look for bullish setups up towards the next key area of resistance, the upside and the target set at the 15424.25. Next is crude oil. Now I have been bullish recently on crude oil. I've been trading this move to the upside, and last week we came very close to the target. We stopped just shy by a handful of pips, and we started to reverse to the downside with this double top confirmed on a break below the low here. So going into this week, what's interesting is if you look at crude oil on a daily chart, it looks like we have 1, 2, 3 waves to the upside. And this reversal last week could be the start of a potential C wave. Now, what's interesting about this is the second wave is shallow. And when you have a shallow second wave, you should, generally speaking, be expecting a deep fourth wave. So if this is the start of a new break to the downside, and on a risk to reward basis, I would prefer to trade it that way and look for short positions in this market next week. But if we do start to decline further, this could actually be the start of a bigger move to the downside, because there's a very good chance that we see a deeper fourth wave in crude oil. So very simply put, going into this week, we have broken the confirmation point of this double top, and as a result, I would prefer to look for short positions this week. We've already started to pull back, and it looks like we may test this broken trend line on the underside. So any deeper correction in crude oil, and what I'll be looking for going into next week is any bearish reversal in this market will be viewed as an opportunity to start to look for short positions down to the next key of support to the downside and the target set, the 59.63. Next is gold. Now last week I highlighted gold as a market to watch to the upside, and we took out both targets, finishing the week right at the second target. Going into this week, I do like the look of gold once again. We're still stuck in a range in the 10-year yield. And so as I mentioned last week, as inflation is rising and bond yields are going nowhere, this is going to help to push real yields to the downside and inversely help support gold to the upside. So starting to lack a bit of momentum. So what I would really like to see is any pullback in this market next week will be viewed once again as an opportunity to look for bullish reversals up towards the next key of resistance, the upside and the target set at the 1910.19. Next is silver. Now in last week's video I highlighted this inverse head and shoulders breakout for you, and we traded right into the target set, and the second target to the upside was pretty much the high of the week in silver last week. So this is on the 1 hour chart. If we zoom out to the 4 hour chart, you can see we pulled back to the trend line which has been forming all the way back since the start of April. And going into next week, this just looks like another good opportunity to start to look for bullish reversals in this market. And I'm going to be looking back up to the target set from last week at the 28.72. Next is US dollar CAD. Now I'm on the 1 hour chart here, and you can see we've been channeling to the downside, and we had this kind of false breakout last week, and this was the double top reversal which I highlighted on Twitter last week. We had a really nice sell-off once we broke down below it, and we're quite close to the target here. So for anybody not involved from last week, I am looking for this to come down and complete last week's target of the 1.2005. And for anybody who is not already involved, a breakthrough here would set us up for another good opportunity to look for short positions down to the next key of support to the downside and the target set at the 1.1921. Next is pound dollar. Last week I was looking for a rally into the 1.42320, and we took out that target to the pip, and that was the high last week. Very simply put, going into this week, any pullback in this market will be viewed as an opportunity to start to look for bullish reversals into the next key of support to the upside and the target set at the 1.4240. And the final dollar pair that I'll be keeping my eye on next week for potential trading opportunities is US dollar Swiss franc. Now US dollar Swiss franc is making its way towards the target of the 0.8926 highlighted in previous videos. For anybody not already involved, any pullback towards the 0.9049 will be viewed as another opportunity to start to look for bearish reversals down to the next key of support to the downside and the target set at the 0.8926. The next two markets I do really like the look of next week, and that's New Zealand franc and Aussie franc. And starting with New Zealand franc, the reason I like these is because if the dollar pairs don't really move next week, or we start to have a bit of trouble with that support area in the DXY, and there are no real setups in the dollar pairs we've looked at, New Zealand franc and Aussie franc could be really good alternatives that I'm going to be watching next week. Starting with New Zealand franc, you can see we've broken out of this consolidation. We are trending to the downside, and we've tested the lows here, and we have this kind of descending triangle pattern. So very simply put, going into next week, any pullback towards the 0.6508 will be viewed as an opportunity to look for bearish setups down towards the next key of support to the downside and the target set at the 0.6368. Just bear in mind, we do have an interest rate decision coming out of New Zealand next week, so it could get a little bit volatile around that time. Aussie franc also breaking out of a descending triangle type pattern. We broke out, pulled back, retested. So any pullback in this market next week will be viewed as an opportunity to look for bearish reversals down towards the next key of support to the downside and the target set at the 0.6936. And the final franc pair I like next week is franc yen. We're coming very close to the target set from last week, so we either need to take this target out, or for anybody not already involved from previous forecasts, any correction back towards the 120.12 will be viewed as another opportunity to look for bullish reversals up towards the target set from last week at the 121.61. And if we break through here, or if we just break straight through here like this, I'm going to be looking up towards the second key of resistance, the upside and target 2 at the 122.68. Next is New Zealand CAD, and New Zealand CAD is breaking out of this descending triangle pattern as well. Very similar to Aussie CAD as we're going to look at next. Both Aussie CAD and New Zealand CAD, as well as Aussie franc and New Zealand franc, in my opinion, provide a very good counterweight to the dollar pairs next week, because if for whatever reason the dollar rises, you would expect the Australian dollar and the New Zealand dollar to depreciate against the Swiss franc and the Canadian dollar. So going into next week, we've already started to break down. Any further move down and a pullback would be viewed as an opportunity to start to look for bearish reversals in this market down towards the next key of support to the downside and the target set the 0.8577, and if we can break through here, we're going to be looking down towards target 2, the 0.8463. AudCad also breaking out of this consolidation from last week. Any correction in this market towards the 0.93580 will be viewed as an opportunity to look for bearish reversals down to the next key area of support to the downside and the target set, the 0.9255. And last but not least, I like pound yen. Now pound yen is starting to consolidate. We're getting a little bit choppy. It looks like we're going to pull back deeper, which would be great because any deeper pullback in this market will be viewed as another opportunity to start to look for bullish reversals up towards the next key area of resistance, the upside and the target set at the 155.40. So that is it for me for this week, guys. Those are the markets I'll be keeping an eye on next week. I won't be looking to trade all of them as usual, but I will be looking for setups in those markets in the directions highlighted. I will post updates as more information comes in on the markets on Twitter during the week. So again, feel free to join me over there if you'd like to get some updates during the week on these markets. If you're seeing any good setups in other markets not highlighted in today's video, why not let us know in the comments section, and any good setups I will post on Twitter for you all. So with that said, I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care and don't forget to trade safely.